Top 5 home buyer mistakes that I see in this market. Now, this usually comes out in a buyer consultation or through webinars, but I'm going to put it here on video just so more people can see it and hopefully end up in a better situation with a lot less headaches. So, top 5 things that I'm seeing right now. Mistake number 1 is wait. People wait for the market to crash. People are waiting for rates to go down to where they were a few years ago. People are waiting for their situation to be perfect. There's never going to be a perfect time to buy a house. You're letting inflation work against you instead of letting appreciation working for you. Time in the market beats timing the market all day, every day. If you can afford a monthly payment without stretching your budget too far and you can find the house you want, jump on it. Number 2, biggest mistake, the second biggest mistake that I see people make is shopping for a house before talking with the lender. I'm Zillow 2 every day. It's very easy to get attached emotionally to a house, but then figure out later on that it's not the right fit for you financially, or you don't qualify for enough to be able to afford it. It's real easy to scroll Zillow or Realtor.com or whatever late at night and find something and get attached to it right here before something makes sense right here. I don't want you to get into a situation where you're on a tight deadline and we have to really push on things to make sure that you can actually afford it while you've got it under contract or right when you're ready to put an offer on it. So talk to somebody who's like me, a loan officer who understands the market, understands your situation, can advise you, help you understand how much you can afford on a monthly basis, how much you can afford in the market. Go find a house that's within that price range. You know you can comfortably afford it, then go make your offers. Don't do it the other way around. Number 3, big mistake that I see people make all the time, and this is while you have a house under contract, and that is make some sort of big financial move. Now, this can be adding a credit card, it can be buying a car, it can be changing jobs, it can be moving money around a lot. Doing any sort of big financial move while you've got a house under contract gives our underwriters heart attacks, and it throws off your debt to income ratio, especially adding new debt in the form of buying a car or getting a new credit card. Even if you're just buying appliances for the new house, please wait until after the house is closed to do anything. I've seen it happen too many times where somebody goes and they open a credit card through Home Depot just to buy new things for their house that they're really excited for, and that debt shows up on the last credit check that an underwriter does. Their credit score might even drop a little bit, and that might change their payment. They might have to pay a little bit more every month. Sometimes it can mean that somebody doesn't even qualify for the house that they were qualified for at the beginning. So don't make any big financial moves. Moving money around is a big one that people like to do. You got to move money from your retirement and your checking account or from a parent's account. All of that, we have very strict federal guidelines for anti-money laundering. We have to source all money that's coming in for the last 60 days. So please don't move something around until you talk to your loan officer or make sure it's okay with them. Don't quit your job either. It's happened to me. I had to cancel a transaction because somebody quit their job in the middle of underwriting. Not gonna fly, okay? So don't make any big financial moves while you're under contract. Don't buy a car either. This is what we talk about with my clients all the time early on. We want to avoid these mistakes a lot. All right, mistake number 4, that is draining all of your savings to make a down payment. People stretch themselves. They find the house they really want. It's just kind of out of their reach, and they feel like, oh, I got to put so much money down to be able to make this work for me, to make the payment affordable, whatever it is. And they don't think about all the money they're going to spend to move, to make any sort of repairs, or have any sort of emergency reserves. It's always important before you're even looking at buying a house to have at least 3 months worth of your monthly living costs and reserves. That's a minimum. Once you've got a house, you're going to have repairs, you're going to have other expenses, you're going to have furniture and appliances and other things to buy. And if something goes wrong, 3 months down the road, you need a roof repair, you need an AC fix, whatever it is, you need to have money in reserves so you're not set up for a bad situation. Even that means making a smaller down payment, potentially getting mortgage insurance, that's okay. You need to have some reserves to be able to help out in case you run into a bad situation. So please make sure that you have reserves before you're even looking at a house, but especially don't put on too much money towards that down payment to rob you of your optionality if you get into a bad situation. All right, 5, last one, letting emotion override strategy. Now, in a tight market, which still a lot of markets in the Northwest and the West Coast in general are still tight seller markets. So I'm seeing bidding wars, seeing people lose out on deals they thought they could get. I've seen people bidding $50,000, $100,000 over asking it still happens, but finding again, like point 2, finding the house, getting emotionally attached to that house. You can't let that override the financial strategy that we've gone through. So waiving inspections is something I never recommend unless you are a contractor and know what you're getting into. Going over budget. Ignoring any red flags like a bad HOA. I've seen that happen a few times recently where somebody really wants a condo in a great location and they ignore the fact that the HOA is undercapitalized. They're going to have to make a big special assessment right away, right after they move in. They lose tens of thousands of dollars to that HOA just because they didn't pay attention to that during the closing time while we were saying, hey, watch out, this might be a bad situation. So don't go into contract, don't go into a negotiation, anything like that, feeling very emotional wound up and tight and feeling like you have to get this house, you have to make this deal work or something's not going to be right. Stay calm, trust your team, know what you can afford, know what you're getting into, and if you can help avoid kind of these big 5 mistakes that I see, you're going to end up in a much better situation, in a place you're going to be much happier with the process, with the team that you work with, and I think you're going to be happier overall. So please avoid these 5 mistakes, preferably by talking to me. Give me a call, let me help you out anywhere on the West Coast.